Starting with a new chapter. Name of the chapter is leverage. Let us see first of all from examination point of view the kind of importance that it has. There are basically 10 concepts that we can bifurcate, and from examination point of view the kind of importance is given like this. Starting from May 18, 5 marks, then consistently 10 marks. So this was an exceptional examination paper wherein it was asked for 5 marks. Otherwise, every time you can see that it was asked for 10 marks. So average is 9.16. So this is what's the kind of the weightage that we have from examination point of view. Now let us have understanding that say what do we understand with the term leverage. And we are going to understand that say how it is useful for the company. So there are two things that say we are going to discuss over here is that say what do we understand with the term leverage, and the second thing that we are going to understand is that say how is it useful for the company. Do not write anything, let me just give explanation to you. Dear students, said there are three leverages that we are going to understand. The first is given a name as degree of operating leverage. Second is given a name as degree of financial leverage. And third is given a name as degree of combined leverage. Like that, so there are three leverages that we are going to understand. What do we understand with DOL, degree of operating leverage, DFL, DCL, all those things that say we are going to understand. Just I want to give you first of all an helicopter view that say what we are going to understand over here, say this chapter. So there are three leverages that we are going to understand. That is operating, financial and combined leverage. Okay. Going ahead. First of all, I would like to have an understanding. I would like to give you explanation for the operating leverage. To give that explanation, I take a numerical example so that I will be able to better relate it. You don't have to write anything. Let me only give explanation to you. So to understand that, we are taking the numerical example that we have as a base. So kindly open this question. Yes, it is on which page number? It is on which page number? Okay, 158 is the page number. Fine. So everybody please open this. Thank you. आपको कुछ लिखने का नहीं है, आपको सिर्फ समझने का है. मैं सब कुछ समझाऊंगा, सबका नोट लिखवाऊंगा, हम लोग आंसर भी करेंगे, सब कुछ होने वाला है. पहले मेरे को कॉन्सेप्ट है ना आपको अच्छी तरह से समझाने दीजिए. Let us have understanding. ABC Limited is considering manufacturing and selling of a product. The company is considering either to implement plan A or to implement plan B. तो प्रोडक्ट मैन्युफैक्चर करके सेल करने के लिए हम लोग दो में से एक प्लान इंप्लीमेंट करने का सोच रहे हैं, प्लान ए या प्लान बी. The following information have been given about the expected results of each of the plan for the first year. तो पहले साल के लिए हमको दो प्लान दे रखे हैं और दोनों का रिजल्ट्स दे रखा है. सेल्स दे रखा है, वेरिएबल कॉस्ट दे रखा है, उन दोनों का डिफरेंस है कंट्रीब्यूशन, वो दे रखा है, फिक्स कॉस्ट दे रखा है, और कंट्रीब्यूशन माइनस फिक्स कॉस्ट हमको ऑपरेटिंग इनकम दे रखा है। ऑपरेटिंग इनकम को अर्निंग बिफोर इंटरेस्ट एंड टैक्सेस कहा जाता है। ऑपरेटिंग इनकम का मतलब ये है कि कोई भी फाइनेंशियल चार्जेस उसमें से डिडक्ट नहीं हुआ है, एंड दैट इज गिवन अ नेम एज ऑपरेटिंग इनकम। फ्रॉम अबव इंफॉर्मेशन कैलकुलेट EBIT for second year for each plan if the sales increases by 20%। चलो आप लोग रफ में ये कैलकुलेशन करके मेरे को आंसर दो रफ में। So we understand that say information is given to us like this: plan A, plan B, sales of the company from 1 lakh it will increase to 1,20,000. Why? Because the sales increases by 20%. Variable cost, it is 80,000 plus 20%. That comes to 96,000. So 120 minus 96, that will give a contribution of 24,000. Fixed cost is going to remain same, 10,000. Contribution minus fixed cost is operating income, that is 14,000. So this is the EBIT of plan A in case of the sales increases by 20%. प्लान बी के लिए सोचते हैं अभी। प्लान बी सेल्स इज 1 lakh, so again it will increase to 1,20,000. Variable cost is 60,000, it will increase 60,000 plus 20%, that comes to 72,000. So this is 48,000. The amount of the fixed cost is 30,000. And this is 18,000. Like that, say we'll get the EBIT, that is an amount of 18,000. Okay. Now second part of the question. Calculate the operating income for the second year for each plan if the sales decreases by 10%. Try to calculate answer on your own. Let us see. The sales decreases by 10%. So plan A 1 lakh minus 10%, that comes to 90,000. Then 80,000 minus 10%, that comes to 72,000. Contribution is 18,000. This is 10,000. This is 8,000. Next, sales reduces to again 90,000. Variable cost 60,000 minus 10%, 54,000. Then the amount of the contribution will be 36,000 minus 30,000, that comes to 6,000. This is the way we'll have the results. Now third question, which plan the company should select in the first year? Everybody is requested to pay attention. ये जो थर्ड क्वेश्चन है वो उसको मैं थोड़ा एलेबरेट करता हूं. आई एम आस्किंग अ क्वेश्चन टू ऑल ऑफ यू. If company is expecting sales of the company to increase, comma, then which plan should be selected in first year? That is my question. Because friends, you can see that say we have been provided with this results for the year 1. These results are provided for year 1 for plan A and plan B. Yet the company has not selected any plan. And let us say that the director of the company is say telling us that say you guide us that which plan we should select if we are forecasting that say there will be an increase in the business in future. तो हम लोग कौन सा प्लान उनको सजेस्ट करेंगे? डियर स्टूडेंट्स, वी अंडरस्टैंड अगर सेल्स बढ़ेगा तो दोनों प्लान का प्रॉफिट तो बढ़ने ही वाला है. जैसे कि यहां पे प्रॉफिट कितना था 10,000, तो यहां पे प्रॉफिट कितना हो जाएगा 14,000. यहां पे प्रॉफिट कितना था 10,000, तो यहां पे प्रॉफिट कितना हो जाएगा 18,000. So in both the cases, so the profit is always going to increase. We understand that say the increase in the profit, that is increase in the EBIT, in the first case it is 40%. कैसे 40%? 14,000 minus 10,000 upon 10,000 into 100. ऐसा करके 40% होगा. Over here it will be 80%. That is 18,000 minus 10,000 divided by 10,000 into 100. यानी कि प्रॉफिट दोनों में इंक्रीज होगा, पर प्रॉफिट किस में ज्यादा इंक्रीज हो रहा है? बी में ज्यादा इंक्रीज हो रहा है. तो हम लोग उनको ऐसा बोलेंगे, इफ यू आर एक्सपेक्टिंग दैट द सेल्स इज लाइकली टू गो अप, you should go for B plan instead of A plan. So if at all you are expecting the sales of the company to go up, then in that case you should go for plan B. Why? Because the plan B has higher increase in the profit. दोनों में प्रॉफिट तो इंक्रीज होने ही वाला है, बट बी में ज्यादा इंक्रीज होगा. बी प्लान. In that, my question is, if the company is expecting the sales of the company to fall down in the second year, sales of the company to fall down in the second year, तो कंपनी को फर्स्ट ईयर में कौन सा प्लान लेना चाहिए, ए या बी? दैट इज माय क्वेश्चन. प्लान ए इज करेक्ट आंसर. देखो, अगर हमने प्लान ए लिया और सेल्स रिड्यूस हो गया, तो ऐसा नहीं कि प्रॉफिट रिड्यूस नहीं होने वाला है. प्रॉफिट तो देखो दोनों में रिड्यूस होगा, अगर अपना सेल्स रिड्यूस होता है तो. हाउएवर द रिडक्शन इन द प्रॉफिट विल बी लेस इफ एट ऑल वी गो फॉर द प्लान ए. देखो यहां पे कितना रिडक्शन है, 2,000 का रिडक्शन है. फ्रॉम 10,000 इट रिड्यूसेस टू 8,000, तो रिडक्शन कितने का है, 2,000 रुपए का रिडक्शन है. फ्रॉम 10,000 रुपीज, तो रिडक्शन कितना परसेंटेज हुआ, रिडक्शन हुआ 20%. फिर बी में क्या है, रिडक्शन 4,000 रुपए का है, फ्रॉम 10,000 रुपीज. सो वी अंडरस्टैंड दैट देयर इज रिडक्शन बाय हाउ मच परसेंटेज, देयर इज अ रिडक्शन बाय 40%. ऐसा हम लोग समझते हैं. तो देखो दोनों में प्रॉफिट रिड्यूस तो होने ही वाला है, पर किस पे ज्यादा रिड्यूस हो रहा है, बी में ज्यादा रिड्यूस हो रहा है और ए में कम रिड्यूस हो रहा है. सो वी शुड गो फॉर द प्लान ए, ऐसा हम लोग समझते हैं. So based on above working, we understand like this. Sales of the company increases by 20 percentage or it falls down by 10 percentage. There are two, like the questions provided to us: increase by 20, reduction by 10. This is plan A, this is plan B. This is plan A, this is plan B. If at all the sales increases, the operating income increases. Now what is the rate at which the EBIT increases? We understand that the EBIT increases in the first case by 40 percentage, and over here it increases by 80 percentage. It reduces by 20 and reduces by 40. This is what we can see. Now let us say that the general meeting is, let us say that board meeting is going on, and we are that is the finance manager of the company, and we have been called upon to explain all these things. One of the director is raising a question like this, that I do not understand that when sales increases by 20 percentage, why profit increases by 40? Why profit increases by 80? When the sales decreases by 10, why this reduces at a higher rate? Why this reduces at a higher rate? Why the change in the operating income is more in comparison to the change in the sales? I am not able to understand that. Just can you explain me, being finance expert? Like that, so there is a question from a director. So the director wants me to explain that say ये जो change in the EBIT है वो change in sales के साथ match क्यों नहीं होता है? तो I gave him explanation like this. Listen carefully. हम उनको क्या समझाएंगे? सर ये फिक्स कॉस्ट की वजह से. ये फिक्स कॉस्ट क्या रहता है? आपका सेल्स ज्यादा होगा या कम होगा, ये फिक्स कॉस्ट सेम ही रहता है. So when your sales increases and your fixed cost is not increasing, so the rate at which the EBIT increases is more, and when the sales is falling down, even in that case the fixed cost is remaining same, so EBIT falls down at a higher rate. ऐसा मैंने उनको आंसर दिया. So we understand that say the rate at which the EBIT changes does not match with the change in the sales. Why? Because say there is a fixed cost. That is the reason. As far as the degree of operating leverage is concerned, listen carefully. Degree of operating leverage is concerned, it is measuring what would be the percentage change in operating income with percentage change in sales. As far as the degree of operating leverage is concerned, it is measuring what would be the percentage change in EBIT with percentage change in sales. How do we compute the degree of operating leverage? Degree of operating leverage is calculated by using a formula, contribution upon EBIT. Plan A and plan B. For plan A, you can see 20 upon 10. It is 20,000 upon 10,000. So for plan A, degree of operating leverage is 2. And for plan B, 40,000 upon 10,000. So the answer is 4. So degree of operating leverage of plan A is 2 and degree of operating leverage for plan B is 4. So we understand that, listen carefully, when sales of company A increases by 20%, so 20% into 2, that comes to 40%. So here you can see that say the operating income increases by 40%. When sales of the company A reduces by 10%, so 10% into 2, this reduces by 20%. For plan B, the degree of operating leverage is 4. So 20% into 4, that comes to 80%. Then over here, negative 10% into 4, that comes to negative 40%. So degree of operating leverage is measuring what is the percentage change in EBIT for every 1% change in sales. How this formula is having a derivation, I just explained that to you in 2 minutes of time. But before that, I am giving an explanation to you like this. Listen carefully to this explanation. Plan A and Plan B. Degree of operating leverage is 2 and degree of operating leverage is 4. We understand that if at all you are expecting the sales of the company to go up, then in that case you should select a plan which is having higher degree of operating leverage, because with the increase in the sales you will be able to have higher increase in the EBIT by selecting that plan. And if at all you are expecting the sales of the company to fall down, then in that case you should select a plan which is having lower leverage, so that it will have the lower reduction say in the operating profit. This is the way you should make the selection of the financial plan. ये फॉर्मूला का डेरिवेशन मैं पेंडिंग रखता हूं, उसके अलावा कोई डाउट हो तो बताइए। ये फॉर्मूला का एक्सप्लेनेशन मैं आपको 5 मिनट में देता हूं, उसके अलावा कोई डाउट हो तो बताइए। किसी को वापस समझना है तो भी बताइए। हाँ, दर्शिता का क्वेश्चन है कि सर लास्ट पॉइंट वापस समझाइए। देखो दर्शिता बेटा, अगर मैनेजमेंट ऐसा बोल रहा है कि मुझे लग रहा है कि सेल्स बढ़ेगा, तो बेटा जिसका लेवरेज ज्यादा होगा वो प्लान सेलेक्ट करने की वजह से ऑपरेटिंग इनकम ज्यादा इंक्रीज होगा। So if at all you're expecting the sales of the company to go up, you should select a plan which is having more leverage, so you will have more increase in the profit. And if at all the management is expecting the downfall in sales, then in that case you should select a plan which is having lower leverage. Lower leverage से क्या होगा कि जब हमारा सेल्स गिरेगा ना तो ऑपरेटिंग इनकम में कम गिरावट आएगा। दर्शित, आर यू क्लियर और नॉट? नीचे लिख के बताइए बेटा। शिवानी का क्वेश्चन है, सर वी कैन से दैट वॉट एवर द चेंज कम्स इज बिकॉज ऑफ, वेरी गुड, करेक्ट है बेटा शिवानी, यू आर करेक्ट बेटा। चलो थैंक यू दर्शिता। तो क्या मैं आगे जा सकता हूं फॉर्मूला के एक्सप्लेनेशन के लिए? किसी को फॉर्मूला का डेरिवेशन समझना है तो जस्ट बिल्कुल लिख के बताइए, क्योंकि डेरिवेशन कभी भी एग्जाम में पूछा नहीं जाता है। ओके ओके, आपको समझना, डेरिवेशन कभी पूछा नहीं जाता है। अच्छा, तो भी चाहिए आपको, ठीक है। पीएसपी में एकदम आपको जबरदस्त सर्विस मिलेगा। वंस यू आर इन पीएसपी एंड यू डोंट वरी। Yes, let us have understanding the derivation of the formula. To give you explanation, I am taking the base of company A details. Taking either of the company details for doing answer is acceptable. 182. Sales of the company is 1 lakh. Variable cost is 80,000. Contribution is 20,000. Fixed cost is 10,000 and EBIT is again 10,000. Now let us say that the sales of the company increases by 20%. So this is 120, this is 96, this is 24, this is 10,000 and this is 14,000. This is the way we have the operating income. Now understanding the derivation, first of all I am making a calculation of variable cost to sales ratio. How to compute the variable cost to sales ratio? It is variable cost upon sales. That is the variable cost to sales ratio. So it is 80,000 upon 1 lakh. That is 0.8. And we understand that so the variable cost to sales ratio is going to remain same. 96,000 upon 1,20,000, it is going to remain same, that is 80%. Now we understand that say change in EBIT is equal to change in contribution. You can see that say EBIT changes by 4,000. That is nothing else but it is the change in the contribution by 4,000. So now we understand that say the change in EBIT is equal to change in sales minus change in variable cost. In a way that say the sales changes by 20,000 and variable cost changes by 16,000. So 20 minus 16, that comes to 4,000. So further we understand that say the change in EBIT is equal to change in sales minus change in variable cost is change in sales into variable cost to sales ratio, that is variable cost upon sales. So variable cost to sales ratio is variable cost upon sales. In a way that say over here we can see that say the sales increases by 20,000. Variable cost to sales ratio is 80%. So 80% of 20,000 comes to 16,000. So change in sales minus change in variable cost, and it is nothing else but it is the change in sales into variable cost upon sales, that is variable cost to sales ratio. So now we understand that say change in EBIT is equal to change in sales, that is taken common, into 1 minus variable cost upon sales. So change in sales is taken common and we take variable cost upon sales over here, and this change in the sales in bracket is represented by 1. Next is change in EBIT is equal to change in sales into, now we will take LCM. This is 1 upon 1. Okay, this is nothing else but it is 1 upon 1. So now we will take the LCM of 1 and sales. LCM of 1 and sales is sales. So over here in the division we will write sales, and in numerator we will write sales minus variable cost. Next, change in EBIT is equal to change in sales upon sales into contribution upon, ये सबको पता चला ना? So we understand friends over here that say this sales value I have mentioned it over here, and you can say do like this. Why? Because there is a multiplication sign. Now for the purpose of derivation, what I am doing, friends, I divide on both the sides with the EBIT. So I am writing over here EBIT and I am writing over here EBIT. That is permissible. Whatever you want to do, you can do on both the sides. Multiplication, division, addition, subtraction, but you have to keep a parity. Now listen carefully. This value I am keeping at, that is as it is. Contribution upon EBIT is equal to, I am solving this value. Change in EBIT upon EBIT. So can we say it is percentage change in EBIT? So it is the percentage change in EBIT upon this value will go on the opposite side and it will go in the division. Okay. This will go on the opposite side in the division. Change in sales upon sales, that will give the percentage change in sales. So contribution upon EBIT is what we understand as degree of operating leverage. So DOL is measuring what is the percentage change in EBIT for every 1% change in sales. That is what we understand as, so the DOL formula derivation. So we can conclude something like this, that if at all the leverage is more, then in that case there are more chances of the increase in the profit when the sales increases, and if at all the leverage is less, then in that case you will be able, that is you will have the lower reduction in the profit when the sales is decreasing. This is what we have concluded so far. Now continuing with my questions to you. In the third question, which plan the company should select if at all you are expecting increase? Then it is B. If at all you are expecting a reduction, A. My next question to you is that which plan should be selected by the company, comma, in first year, comma, if it is uncertain about its future sales. If at all you are certain that this is going to happen, if you are certain that this is going to happen, then in that case what we should do, that we have understood. But if at all the company is having uncertainty, let's say what will be the future business, then in that case, in the first year which plan it should select? Because as far as the first year is concerned, in the first year we can see that both of them are having the same operating income. However, for future we are uncertain. Then in that case, what is your advice? Dear students, over here we have to apply our expertise like this. Plan A, plan B. Leverage is 2 and leverage is 4. DOL. We can tell management of the, that is we can tell to the management like this, that the degree of operating leverage is measurement of risk in terms of operational fixed cost. Full stop. Listen carefully what I am going to speak further. Degree of operating leverage is the measurement of the risk in terms of operational fixed cost. Higher the leverage, comma, it means more risk. So if the company wants to take more risk, comma, it should select plan B, full stop. If sales increases, comma, profit of the company will increase at a higher rate and vice versa. In a way that, say, if at all the sales increases by 20%, and suppose you have selected the plan B, then in that case your operating income will increase by 80%. But the good story does not end over here. If at all there is a reduction in the sales by 15%, your operating income will have a reduction of 60%. So plan B is considered to have more risk. And if at all the company is risk averse, if the company is risk averse, then in that case you should select plan B. So if at all the sales reduces, let us say that the sales reduces by 20%, then in that case your profit will decrease, but it will decrease only at the rate of 40% instead of 80% in case of the plan B would have been selected. At the same time, remember that, say, if at all the sales increases, let us say that the sales increases by 35%, then in that case your profit will increase at the rate of only 70% instead of 140% in case you would have selected the plan B. This is what we understand, and this is required to be explained to the management of the company. That, say, if at all you are not sure, then in that case you are required to assess your risk bearing capacity. If at all your risk bearing capacity is more, then in that case you should go for a plan which is having high leverage, and if at all your risk bearing capacity is less, in that case you should go for the lower leverage. And this is what, say, the basically the concept of the leverage. It is not about only the calculations that we are going to do. We have to understand the concept is like this. And definitely it is like one of the very important decision which you are required to take. If at all you increase the proportion of the fixed cost in the business and your sales is increasing, you are very happy that, say, this cost is not increasing, so my profit increases at a higher rate, so you are feeling very good. But if at all you have introduced higher amount of the fixed cost and the business is not there, sales is falling down, then in that case this cost is not reducing and this fixed cost becomes a burden for you in that case. This is the effect of the leverage. You have kept lower leverage, then in that case you will have, of course, lower increase in the profit with the increase in the sales. Why? Because lower fixed cost means higher variable cost. And when your sales increases, your variable cost will also increase. And with that, so the amount of the profit which is remaining with you will be less. This is what we understand.